Welcome everybody to the Chinchilla Pickin' Podcast. It is September the 28th, 2025 at 4:09 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only the Baron of Bonds himself, Brandon Beaver. Brandon, how are you?
I'm good. How about you?
I am doing fantastic, brother. I am fantastic. It was a fabulous week. If you follow us on TikTok or Instagram, you saw my post. Met Sarah, got bought out. That was great. If you've been listening to us for any length period of time, you know way back in April, I bought into Met Sarah. Way back. My first buy-in price was around 18, 19 bucks a share. That's how long ago I bought Met Sarah.
All right.
My
Nice.
cost basis ended up being around 21, 22-ish. I forget. It doesn't matter because it got bought out for 56, 50 at the end. It was 56, $55 a share when I sold. So I did fabulous. I was very happy with my return. A lot of people that follow us also bought into Metsera and they were all very happy with their return. So that was a good boon. Metsera getting bought out by Pfizer, which company you've traded this year, I believe, right? Or
Do
was
I
it
have to
last year? Was that
do I
last
have
year?
to talk about it? I don't remember. I don't remember. I have,
You know, Pfizer's been on the hunt for a weight loss drug for a while. This is a good fit for them because they can't do it apparently on their own. So why not buy a company that is actually doing well with it?
right. I've sold a total of 5 stocks this year, and that's it.
Really?
Yeah, that's all. 5 stocks, and this is like a continuously downward number for me over the past like 10 years, I would say. I mean,
So do you
10
think as an
years.
investor you're like maturing and growing and just like you're not buying and selling as much?
I do, and my taxes used to take me 2 hours at H&R Block because of how much I would buy and sell
Yeah.
because I was trading. I mean, it was a wild amount, and now it's like I've sold 5, and four of them I made money on, and the one that I didn't was Pfizer. So
I tell you what, I still do day trades. I don't post my day trades because I'm in and out so quickly that there's no point in me posting.
right.
But I do day trades and I enjoy doing it. But I've been doing it for a long time and I have a lot of experience in the market. I do not recommend day trading to anybody. There's not
You
a
don't think
single soul.
anybody?
No, I don't know anybody, Brandon, besides
So
you. You will probably be the only one I would say go ahead and day trade because I would feel confident you would make the right decisions. I don't know anybody else personally in my life that I would say, yeah, go ahead and day trade, you'll be fine.
it depends on the person's personality. So if you're like a get up and go, 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 go kind of person, that very direct to the point, want to dive into anything, and experience it kind of person, then day trading could be a great thing for you. But if you prefer to be, if you're somebody that's prone to like very high anxiety, then day trading probably is not for you.
Yeah, you're gonna stress out and then you're gonna pull all your hair out and then you end up like me.
Right. And so I've always said that I think you need to identify kind of your personality type before you get into anything. And I
Yes.
have kind of both where I can have the patience, but also like the day trading aspect is a little bit exciting sometimes as well. So I don't do it because I don't have the time for it.
There's other
Um,
ways to chase excitement in your life. You know,
there,
go rock climbing, go whitewater rafting, go skiing, go snowboarding, go pick up boxing and get in the ring with somebody who's better than you.
yeah.
That you're gonna
So
get that adrenaline rush, all right.
so I was talking about my personality type. I think it was either last night or it was Friday night with my girlfriend. And Dave, I think you're kind of in the same boat as I am on this.
Okay.
Um,
Can't wait to hear
we
this.
we like to do things before we think about them and think about them while we're doing them. And it's something that I have to watch out, during my investments and stuff like that. I get pull the trigger sometimes a little bit too easy. And I told Lindsay the other night, and I think this is perfect. I said somebody with my personality type is more likely to break their neck because they dove into an 8 foot pool.
Yes.
Because you didn't calculate. You just did
It,
it. You didn't think
it
about it, you know?
right, and I am totally that way. If I'm on a snowboard and you're like, "Hey, Dave, look, let's go, let's take the helicopter up to this top mountain right here," I'll be like, "Sure, let's do it. Rock
Right,
and roll, baby." I get up
right,
there and I'm like, I get off and I'm like, "What did I do? What?
right.
I got to
Because
get
that kind of
down. Let's
risk, that
go."
that kind of risk is exciting. With investing, I have to reel myself in a lot, and I've
Yeah.
learned that, and I've become better at that. But with day trading, that's a little bit easier because it's easier to digest the losses
Yes.
if you're like that.
It is
So
easier to digest loss. I just took a huge loss from bullish. I overmade my money back in Metsera. So my two like the two sales recently, stock sales, one was negative. I was really down, took a few days off the market. The other one, a boon, loved it. And they're only a couple weeks apart. It's amazing. The swing of emotions. But neither they weren't day trades. I held each one bullish, but I had the fewest amount of time, but it was still a couple months.
yeah,
And it's like just the swing of emotions though for me was crazy during that period.
yeah. And
But yeah,
that's why too. Sometimes you got to take a step back and take a break from it, and
yes, yes. I t
rationalize yourself a little bit.
right. I tell you what, anyone listening, I know we have a few listeners that for some reason over the years that have pinged us from Switzerland. I want to just put this out there. I will be over in Switzerland skiing in February. So look for chinchilla picking. I will be in Zermatt at the skiing and having fun with a stop in London, jolly old London, and gonna have a good time in both places in
It
February. It's gonna be cold, but I'm gonna love it.
it's always interesting to look at the Spotify stats and see new countries and think about who
Right?
could be listening to us over there. And some aren't even English speaking countries. And that's pretty cool.
Yeah, and I remember when you first started telling me, yeah, we got some listeners from Switzerland. I'm like,
Yeah.
Switzerland. And
And there's
then
a
and then you're like, hey, those listeners are back again. Oh, hey, those listeners from Switzerland are back. I'm like,
yeah,
we got a fan base in Switzerland, so let's go visit them.
it's very small but very
Loyal.
loyal, very
We got our
loyal.
5 people in
And
Switzerland. I'm coming, guys. Let's go
yeah,
skiing.
every once in a while I get a country on here I've never heard of before. It's cool. It's cool to see for sure.
Yeah.
I like it.
All right, let's get into some stocks and investments. It was a slower news week, but we do have some news to cover. Besides the good news on Metsera, let's get into it. Uh, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You actually hear the live back and forth, the bicker and the banter right here on the show for you. As always, Mr. Barron, take us away.
We're back in a period right now where actually wages are increasing faster than inflation. Who saw that coming?
I
Isn't that
did not
crazy?
see that coming at all.
Yeah, so from July 2024, well, maybe we're not still in the period, but up to, the most recent measurable data here from July 2024 to July 2025, nominal average weekly rate wages, blah, increased 4.2%, and the inflation rate's at 2.7%.
It's still going to take years to make up for that high
Oh,
inflation.
yeah, for sure. We're
I
still
mean, we're
way
never, it's
behind
going to
there.
take years to get back to where we at as far as like the power of your dollar.
Oh my God. It's interesting. It's scary. You're crazy to think about this. Honestly, from my particular situation, if I was making in 2019 what I'm making now, oh my gosh, the amount of money that I would have is wild.
If
And my
yeah,
standard of living has increased, but like marginally compared to actually how my wages have increased.
I am glad I'm not making the amount of money I make now as I did in 2019.
Why?
Number one, I quit drinking during that time. I gave
Yeah.
up alcohol. I'm sober now. So I don't make stupid mistakes. Um, Number two, I'm way more settled, way more
Okay.
chill, way more relaxed now than I ever was in 2019. And
This
I'm
is
in
true.
way better shape.
That comes with age.
I'm in way better shape.
That comes with age. That well, the shape doesn't come with age. That's different. But the more relaxing. I mean, I wish I could go back to 2019 and tell myself, hey, the things you think matter don't, and then the things that you don't think matter do.
Right? Oh man.
And here's a
Yeah.
list of what you should focus on. And none of
Yes.
it is on your list right now.
But yes, what you were saying is right now wages are growing faster than inflation, which is good news for the average day person, yeah, the average consumer,
Right.
a strong consumer.
Month over month, personal incomes increased 0.4%.
What are they?
It
They're
sounds
using the
low,
term
but that's good.
resilient. They're using the term resilient consumer right now, right? Not strong, resilient.
Yeah, it's resilient, and right now they're saying it's bifurcated, and that a lot of the expenditure growth is coming from the wealthiest rather than the middle class or the working class. They're saying the middle class and the working class is feeling the pinch of inflation still, which I can see that. But I've also seen that reported multiple times over the course of my investing career, not just now. I mean, that's been something that's been said time after time after time after time again. The only the only time that was kind of in reverse was during the increasing of the interest rates after COVID, when the Federal Reserve started increasing interest rates to levels that we hadn't seen in years. The wealthy pulled back on their spending, and actually the middle class and the working class was spending more than the wealthy was. But
Are
that
you
didn't
talking
last
about? You
long.
talking about
So
right after COVID? Are you talking
yeah,
about right
right
after
after
COVID?
COVID, well, really 2022 when the Federal Reserve started raising interest rates, a lot of the luxury stocks and stuff like that took big hits because the rich honestly stopped spending, and that's
I
when we
believe they were
saw.
investing.
Yeah, yeah, well, they might have been, but that's also when we saw a record number of people making over $100,000 a year start shopping at Walmart and
Yes.
Costco, and just trying to pull back their spending. But now that's kind of reversing, and we're starting to see it really go back to normal. And this is kind of how it is: the wealthy drive the spending, and the consumers on the middle and the lower end feel more of a pinch. It's how things are, unfortunately. So. I mean,
And
I don't like
here's
it, but it's
yeah.
not out of the norm.
And what we try to push on this show here, Brandon, and correct me if I'm wrong, but it's if you just take your own investing into your own hands, then you can take yourself from one level to another level, but you can also have that little I don't want to call it a safety blanket, but you can have that extra chunk of money set aside to work for you outside of your 401k or pension or whatever you have over here and your income over here. You have this third chunk of money that you invest with and you're growing and you're creating something out of. And every single time you take this investment money, and this is what I try to teach people, is like when you go from $0 in your investment money, and you start investing, you grow real quickly from 0 to 10,000. That goes pretty quick, and you're feeling like, okay, now I got 10,000 in there. I'm doing very well. And I'm talking from people who have no experience and they're just putting in like maybe $100 a month or something into this, right?
Yeah, well, so the 0 to 10,000 was actually the slowest for
For
me.
you, okay.
Yeah, for me, and then it
You
picked up speed after 10,000. That's when things
for
started
most
going
people,
crazy.
the crawl, if you will, the crawl
Yeah,
is 10,000 to 100,000.
yeah,
That takes the longest time and it feels forever. And you feel like you have no hope and you're just stuck in the zone and you're never going to get anywhere. After you hit $100,000 in this third chunk, I'm talking about outside of your retirement accounts, outside of your income, third chunk, $100,000, you've been at it for a few years now because it takes people to go from 0 to 100,000 a few years to get to this point. Once you get to this point, now you're very good. You should be good at researching, should be good at investigating, should be good at learning terminology and doing these things. You should have read a number of books by now, have a few different podcasts you listen to, and chinchilla picking, hopefully one of them. And this amount of money now, you should be able to create an income yearly if you had to off of this money if need be at that point at a
yeah.
hundred thousand. And then the growth from 100,000 to 1 million goes much faster than 10,000 100,000, and it's mainly due to experience, patience, and you made it through the hardest crawl part, the part that really mentally drains you is at 10,000 to 100,000 because you get to these points where you're like 60,000, you're just like, you don't see hope, you don't see the light in the tunnel. But then, you hit the 100,000 mark, you're like, oh, wow, finally did it. You realize you can do it. Once you accept that mentally and you realize you can do it, now that 100,000 to million is going to go by fast.
My slowest, honestly, was when I only had like 500 to $1,000 on at the very beginning. And
Really?
that was like, oh, like I made a very small amount of money in the stock market this year, but then it's like, all right, well, hold on. Now I got to retrain my brain to think about this in percentages.
Percentages. That's what I
Right.
preach. I
And then,
preach that.
one year when I was towards the beginning of this, when I was like 25-30% for the year. All right, that's
Right.
good. That's awesome. Then my second major adjustment honestly came with my portfolio. My mindset was when I was about $10,000 into the stock market. And that's because at this point in time, I've got like, instead of a handful of stocks, like five or six stocks, now I've got 12 or 13 stocks, a little bit more to keep track of. And I went from at the very beginning when I would invest even towards like, a couple of years in, maybe even, I was looking at it like, all right, it was just a nice round number that I liked. So anytime I would enter in a new position, it would be $500. But once I got up to the point where I had $10,000 in the account, it was like, all right, $500 isn't enough now. That doesn't even move the needle anymore. Now I've got to readjust my mindset and the amount of money that I'm entering into a new position with. Um, comes into play. And then also at the very beginning of it too, it became a little bit more intimidating because now you're playing not with $500, you got $10,000 on it. That's a little bit more money, right? So it's a little bit more to keep track of and a little bit more time. Then when I hit $20,000, that all doubled even. And at that point in time, I had like 23 stocks in the portfolio. And it's like,
Ooh.
oh yeah,
Wow, that was
it,
way too spread.
it
That was
was
spread
too
too thin.
much, too
Yeah,
much. I
too
had way
thin.
too much going on. And I
Yeah.
realized that, and I had to pare that back, which is why, like, I sold five stocks this year. So, because it was like the sort of the same thing. Like, I got to pare back. If I can't pay attention to it, then I shouldn't have it in my portfolio. I don't want to be worrying about it every day. But if I'm at the situation where it's you know, an earnings report for one of the stocks that I own happens, and I didn't know about it because I've got too much going on, then I got to pare back, right?
Yeah.
So,
See,
yeah.
I do bigger chunks. I actually have way fewer than 20. And
Well, I mean, look
I
at
do
Charlie
bigger
Munger
chunks.
never had more than five
Yeah,
in his personal portfolio.
and here's the advice, and I've given you this advice, Brandon, personally, and I give this advice to anybody. Like you got to look at once you hit each level. If you're investing with 100,000, if you're investing with 500,000, or you're investing with $1 million, it's the same as investing with 1,000 to me. I
Yeah,
don't look at it any different, the dollar amount. If I believe in this company, whatever company it is, ABC company, I believe in it and I'm putting my money behind it. I'm going to put my money in it and I'm going to see where this goes and takes me. And I believe in it. So if I fully believe 100%, then I'm putting, as much as I can in
yeah,
and just leaving my minimum cash reserve that I keep on hand for DCA and if need be.
right. For those of you watching on YouTube, I'm just now noticing how terrible my wall looks even more than what it used to look like because I removed this
Yeah,
clock.
can you get the same colored frame for all of them or something, man? I don't know.
I'm going to work on that, and then also I'll get something up here in the middle or rearranging this wall because I put the clock in the living room, and now I'm looking at it and I'm like,
You
oh,
know,
that
you
looks
know,
awful.
if you're watching this on YouTube, the worst part is Brandon and I both used to work for a major U.S. furniture retailer.
Yeah.
We
And
should know better. We should
I,
know how to
I,
decorate, but we
I
don't.
worked hand in hand with interior decorators for like
Right?
5 years, and driving probably, if any of them are watching, this is driving them nuts right
They're
now.
just, they should want to go over there and tear it up and redo it.
Right.
Anyways, you have a company, right? What company are you gonna talk about?
Well, hold on. I'll get to that in a minute. I kind of want to keep going on the subject here because the Federal Reserve Chairman Jerome Powell started talking about how stocks are fairly highly valued, and then a bunch of people apparently decided to take this as stocks and advice in the stock market, which is not that's not what it's meant to be. This guy's like he's like a meteorologist, right? Looking at the overall weather patterns. He's not telling you to sell Microsoft. It's
Yeah.
just, and honestly, I don't know any retail investors that sold Microsoft over this, but I think that the computer algos for these big companies took over and started selling off these stocks on what Jerome Powell
Yeah.
said, and stuff like this was
Microsoft, hold
fabricated
up. I'm going to
stuff.
interrupt you here. I do want to interrupt you because Microsoft it was Trump who caused Microsoft to go down. He went on Truth Social and said that they should fire a certain individual at Microsoft because they were under investigation by the DOJ for when they were working for the Biden administration White House, and they had access to certain files. The current Trump administration took away their access and recommended that Microsoft let this person go. And that headline is what caused Microsoft stock to go down.
Oh, gotcha. All right.
FYI, sorry.
Well, I mean,
It's
I
hard,
still
dude.
think
There's a
that
million stories every single day. It's hard to keep track of every single one, but
it's better. Microsoft's better than just one person, though.
yes, and that's why
Yeah.
if when it dipped, that was a great time to get back in because it's going to go back up.
Yeah. Interesting details from the latest consumer expenditures report. Spending rose the most last month on transportation, hotels and restaurants, recreational goods and services. That does not tell me recession is on the way.
Yeah, people are traveling and having fun is what that tells me.
Yeah, yeah. The
Yeah.
only thing that I saw that like was kind of a red flag in this was that expenditures from corporations on containers overseas went down. And
Okay.
prices on containers went down as well from overseas.
Well,
But
that's
that's
good.
been, what it is for us, and it's been kind of like that's been a thing in the transportation industry as far as, freight and overseas freight goes, has been declining, not cost, but declining prices. And so it's something to still keep an eye out on, but it's not a reason to say that we're going into a recession by any means. I mean, we're right now, it's consumer expenditures a lot stronger than what we expected it to be.
Well,
So, I
they say
mean,
the
and
consumer
then,
is resilient.
yeah, and that's I mean, also the latest figures from the U.S. Census Bureau for August, that we got a third consecutive monthly increase in retail sales. The figures for the end of August, with 97% of the S&P 500 companies having reported. The blended earnings per share growth rate for the index was at 11.8%. Analysts expected 4.6. So more than double what was expected. That again does not scream recession to me
Not at all.
in
No.
any way.
I think the recession calls are being made because people were worried about stagflation, but inflation actually dropped down 0.1% from last time. And so it does look like it was just a one-time inflation bump due to tariffs and that it's
Yeah.
coming back down. There is
Now
no
the
stagflation.
the Great Eight, and this is what everybody started focusing on and saying, "Oh, is this like the dot-com bubble of 1999?" The Great Eight earnings per share growth was 28.4%.
Nice.
Sales growth was 15.7%.
Okay.
I don't think you saw that with pets.com during the dot-com bubble. Because a
No.
lot of these companies that were getting massive valuations from the market in 1999 had zero earnings.
Here, in fact,
Zero.
I was going back today, Brandon. I was going back to our old lightning round articles uh, setup we used to do. But I do since you brought it up, the boom and bust of the dot coms. I feel like this article fits right in with what you're saying, if you don't
Yep.
mind. So this is one of the articles I was going to cover. This came out just 2 days ago at 2:14 p.m. on 9/26. The headline reads: Investors allege misleading statements in C3.ai class action lawsuit. So this is one of these AI companies that came out and they said that, hey, it's AI, it's AI company is doing great. There's a class action lawsuit against them, saying that the misled investors about the company's financial health and growth prospects. This was filed in DC, according to the complaint. The company projected an overly optimistic picture of its revenue and growth potential. The lawsuit alleges that these projections downplay the significant risk posed by the CEO Thomas M. Siebel's health issues. and that the growth of the company was definitely 100% tied to the CEO, and because the CEO has health issues, that the company could not have sustained the growth they did. It was just a company ran by one person, and so all the people who bought into this company and the stock deserve to be compensated for the poor stock price. Is this just the first of many of these type of lawsuits happen over AI companies coming out, going public, having great stock, overvaluations? We saw it in the space race. We saw well, we covered what, two companies that had like $20 billion valuations and ended up only making 400 million or something.
Right.
And
I'm
that
sure
was
it's going to
Virgin.
happen.
Virgin was one of them. And is this now just the first shoe to drop finally in the AI bubble?
No,
Or
because I'm
is
not
there a
saying,
bubble? Is this just one bad company?
I think it's just one bad company right now. There's going to be more that come up, and we'll probably see a cluster of them when this does enter into a bubble, but I don't see it right now. Not to the level of dot com. I mean, I think the peg ratio for the S&P 500 is around like 1.6 or something like that, which is quite high. But compared to the dot com bubble, which was 1.9%, it's much lower actually. And I mean, look at most of the money that's pouring into these companies are going into companies like Nvidia and Microsoft, which have had stellar earnings growth.
And that should
And,
worry
and
you
it
as a
justifies
capitalist.
it.
You would want the money to be more spread out and not just into like just the seven top companies.
You do, but again, this is a growing trend that's been going on since literally 2010. So, I mean, the grade eight or FANG or however you wanted to put it for the past like, 10 years has been the major growth driver for the S&P 500. I was
Yeah.
looking at I wanted to see the number of companies that are reporting positive EPS guidance, earnings per share guidance, compared to the number that are reporting negative earnings per share guidance. And
Okay.
right now, it's almost exactly 50% positive and negative. And that seems like that should be low, but it's not because the 10-year average is 39% positive.
Really?
So the average is actually more concentrated on earnings per share growth than what we're seeing today, according to what's projected by the companies that are involved in the S&P 500. So we
Hmm.
may see more of a broadening out of a rally if that does, come true.
Hmm.
So, but I don't put much
I don't
stock.
even know what to make of. Yeah. Sorry.
There's a few things that I actually like that I look at that I never put stock into anymore because hear them all the time, and that's the great rotations that we talked about last week out of rotating out of tech. It's just not happening. And then this is the stock market's too concentrated. Here's the risk with that. In an economy that is driven by the wealthy, as far as like the expenditures go on the wealthy, if the artificial intelligence narrative turns out to be less than what we're expecting, and the stock market takes a decline because the grade eight companies get hurt because of it, then the wealthy who are spending right now with the stock market near all time highs, the expenditures from the wealthy is going to go down. That's the risk. But I see like a lot of this money that's flowing into the stock market for the artificial intelligence situations going to companies that deserve it and that have proven that they've deserved it over the past couple of years. And I was a skeptic on this when artificial intelligence first started getting traction, really, at least talking about agentic intelligence and these chatbots and such like 3 years ago. I was a skeptic because it hadn't proven itself yet. But it has more than proven itself right now. I mean, Microsoft's Azure cloud services segment saw revenues soar by 39% year over year.
Well,
And
cloud's
I
been a
mean, that
boom
was
for Microsoft for years now.
right, but this directly attributed to surging demand for AI workloads. Um, and then we saw the unprecedented growth of Nvidia's earnings per share, you know, and
Was
earning
it
that within itself.
unprecedented or was it like not believed?
I think it was
Because they
unprecedented.
kept saying this is what we expect our growth to be, and the stock kept going up, and everybody's like, it's not going to. I
And
said
it
it.
did.
I said there's no way it can continue.
Yeah,
I
me
even
too.
said that, and it
Me
did.
too, but it did. And it was unprecedented, which is why we didn't believe that it was going to happen.
It's true.
Right. 60% of companies in the S&P 500 raised their full year guidance.
Nice.
Yeah.
I like that. That's good news.
So when Jerome Powell comes out and says stocks are fairly highly valued,
Who cares?
right, because if you've
Who
made
cares?
your investment thesis based on your individual companies that you own, that has nothing to do with what your thesis is in the companies that you bought.
Yeah,
Why would you sell?
yeah. And you don't know what companies he's looking at, what data he's looking at. You don't, and why should you? He's just another individual that's looking at this. Yes, he has information, some information that we don't have. But I mean, come on. I, I, I don't care. I did my research on my investments. I know where they're at, and I feel comfortable.
Right. Yeah, all this money is going into companies with viable revenue streams, and this is way different than 1989 for sure.
Yeah.
And so, I still think Nvidia is a good buy. I think Google's a good buy right now. Amazon's been underperforming. It's been one of the worst performers of the grade eight. Why
I,
not?
I, I am
Get into
very
it.
happy with Google right now.
Yeah, me too.
Google made me smile after my bullish loss because the very next week Google jumped up like $30 a share.
Yeah, that was because
Very,
of the favorable ruling on
yeah.
the Department of
And
Justice.
they've continued going up ever since. I've loved it. Thank you, Google.
Right.
Yes, you could
Yeah.
pay my daughter's medical school, Google.
Right. So I started this development kind of happened about a half hour ago, so I don't have that much on it, but I'm actually thinking about buying Comcast, which is something that I'm surprised I'm saying, and I wouldn't have said about a year ago. Um, it looks to me like Peacock's losses peaked in 2023, which makes me happy, and the losses are narrowing on that. They're still not good, and I wish Comcast would give me an update on when they expect Peacock to be profitable, but they don't have that out there. They don't have a timeline that's public on that, and I wish they did. But um, Comcast, I mean, for me, I'm looking at Universal Studios,
The
and
the park play.
yeah, let me give you a
The parks are good. Everybody loves Universal's parks.
oh yeah, revenue just
Harry
continuously
Potter,
increasing,
fabulous at Universal Parks.
right?
Big draw. Jurassic
But
World, fabulous at Universal Parks.
right. So 2020, which we should probably discount, the revenue from the parks was $1.8 billion on that. And of course, travel was restricted and much lower. 2021, $4 billion. 2022 was 7.5 billion. 2023 was 8.9 billion. And 2024 was 9.8.
Nice. Nice
Yeah.
growth. I love
And,
that growth.
and we expected 2022 to be peak travel.
Yeah.
That was like the revenge vacations that was happening.
Revenge.
Yeah. So that's really what I'm looking at. It's NBC Universal. Peacock is, I mean, I would love to say that I'm bullish on Peacock, but I mean, give me a uh a date where this is going to be profitable. So you can really kind of make some of the same arguments, that I made for buying Disney stock for NBC Universal because the parks and the experiences are driving the revenue that is going into and the expenditures that are going into Peacock. But I would like to see Peacock, at least give us a goal date because I know they probably have this internally. I'd like to see it out there publicly too, because once they put it out there publicly, that means they're, at least confident in saying this is the year that this is going to be profitable.
I do have a question for you. Since you like NBC, you've made your case for Comcast. I'm not a buyer. I'm not buying it. But I did have a question come up from a listener who bought into Disney based off your recommendation.
Hmm.
Are you looking for more long-term growth with Disney, or do you feel like, they're kind of going to sit right where they're at for a while?
No, I'm looking for more long-term growth.
Okay.
I'm looking for more long-term growth of the recent investments in the parks and experiences division and the cruise lines. Yeah, and I think that Disney itself, the Disney Plus platform, is going to become more profitable. I think that the ESPN deal that was just made. I think it's $30 a month that they're doing on the streaming. I wish it was a little bit lower. I wish that price was a little bit lower, especially in such a high competitive market. But they're going to have deals with the NFL. They just landed a major deal that's probably going to be undervalued by the market
If you
with the
have the bundle, it's
WWE.
only $10 more a month.
Well, right, but with the WWE going over, that's going to be a big hit to Peacock. All the WWE fans that are going to, get rid of the Peacock app at the end of this year in order to switch over to ESPN, where all the pay-per-views or premium live events, whatever you want to call them, are going to now be sitting. That's going to be a hit to Peacock, but a boom for Disney. So I'm looking for more long-term growth in Disney for sure.
Gotcha. All right. Fair enough, man. Am I
Yeah.
good to move on?
Yeah, we're good to move on.
Perfect. All right, I got some oil news. Oil news. So this one just came out this morning at 8:11 a.m. Eastern Time. The headline reads, "Exclusive: OPEC Plus plans another oil output hike in November." So OPEC Plus has been saying that they're going to continue to raise the output all year long, ever since they hit that low back in April. I've been covering this. Pre-April, there was a division in OPEC that was fighting amongst each other. I believe was it Kyrgyzstan or was it Kazakhstan? It was one of them. I covered it, and they wanted to output more oil because they wanted to pay for the country's infrastructure and build up the IT strength. And I covered it, and I can't remember now off the top of my head. Man, that's how bad my memory's getting, Brandon. But in April, when President Donald Trump took over, he had worked with OPEC Plus to lower oil prices, and they have agreed at that time, back in April, to go ahead and over the course of the year, raise the output by the end of the year, be at a certain level. Well, oil prices have all of a sudden jumped back up. This has something to do with Ukraine and Russian war because Ukraine made a significant strike on Russian refineries and Russian output, and thus, the amount of oil being output would drop by quite a bit due to that strike. So that did make the cost per barrel go up. Well, and because of that, that is one reason why they are doing extra. They're considering doing an extra rise in the output, which was, hold on, I got the number right here. Well, I had the number right here. Right now, I'm currently looking for the number right here. So let's just go over the total numbers. The group's total output reductions at the beginning of the year was 5.8 million barrels per day. That was voluntary cuts at 2.2 and 1.6 by 8 members and another 2 million by the whole group. So the current amount, fast forward to where we're at now, the 8 producers plan to fully unwind one elements of that 2.2 million barrels per day by the end of September. For October, they're going to consider removing a second layer with an increase of 137,000 barrels per day. So that 137,000 number is the new number that's been put out this week by OPEC Plus, and it has a lot to do with that Russian capacity drop. And so it's really a wash. And so oil come Monday morning should be dropping in price because they're making up for what Russia lost.
Okay.
It's what we're looking at. But Brandon, any things that pop into mind here in regards to oil for you, or is this just a reminder that there's still a war in Ukraine and Russia and has a lot to do with oil?
And it's just a reminder, and it doesn't seem like it's going to come to an end anytime soon, unfortunately.
It doesn't. And the implications of oil, I've covered on the show from time to time, like the deals with India buying Russian oil and the U.S. putting pressure on Modi saying, hey, to quit doing this, yada, and sanctions, yada, yada, back and forth. And what happened with Europe buying Russian oil, even though Russia's attacking Ukraine. There's been this whole back and forth of oil and Russia in this war, and it's looks like it's just going to continue. And OPEC has been trying to mitigate the effects of it by making cuts one day, one week due to it, and then also raising output one week, another week due to it. So it continues to be an issue. Here's an article that I found very interesting. Came out to this morning and on 9:28 at 5:49 a.m. And I found it interesting, Brandon, because it has implications towards Boeing. And it's not good news for Boeing, but it has nothing. But this is not Boeing's fault. So bad news for Boeing, not Boeing's fault this time. Nigeria. So Nigeria, if you don't know, is Africa's most populous nation with 230 million people living in Nigeria. Well, their Civil Aviation Authority is certifying China's C919 jet for the country's carriers. The Chinese plane maker Comac, or COMAC, is producing the C919 jet for for Nigeria. So they're trying to move Comac into a position to where it can compete with Airbus and Boeing. And this deal that are looking to cement with Nigeria is the first step in that direction. However, there are still some problems with getting the Comac C919 jet certified for Western nations. They're hoping to make the deal with Nigeria to make it for domestic in Nigeria and maybe in and around bordering countries with Nigeria. They are making some concessions here in order to get these done, however. So let me read on here. Najomo is the hold on, is the Civil Aviation Authority's Director General, Captain Chris Ona Najomo. Najomo said that SOMAC officials had offered maintenance and training support for any planes operated by Nigerian carriers and was exploring a so-called dry lease arrangement with them, with involved leasing aircraft without crew. So that is the deal that Nigeria is trying to make with this Chinese airplane maker, and this would be the big move on behalf of the Chinese airplane maker Comac to make a the direct challenge, if you will, to Airbus and Boeing. Thoughts, Brandon?
I'm not reacting to it yet.
No?
A very small amount of international air travel.
It is a very small amount of international air travel. However, this is the first time that another carrier other than Airbus and Boeing is inking a deal with
Sure.
a large country, if you will. And so that is the significance. It is small in comparison. It is a low dollar amount. It's just a handful of jets. It's more of the symbolic nature of it that like, hey, look out, Airbus, Boeing, we are starting to move into this field here, and we're planning on taking control. Oh, not taking control, taking market share away from you. And with
Hmm.
Boeing doing so bad, it is ripe for the picking
Oh, for sure.
for another company to come in and take market share. So Boeing really needs to get their act together if they're going to stave off a Chinese airplane maker, Comac, and keep them at bay. They really need to get their act together here.
Long overdue. Get
Yes,
a duopoly on aircraft, and one of the players in that duopoly has been not safe and not efficient and probably overpriced as well.
very much overpriced. Although I did say if it dropped below $100 a share, I would buy.
Yeah.
Just because where else are you going to go? That's what we've always said.
Well, I
Where
mean,
else are you going to go?
overpriced is like how much they're selling the aircraft that they're
Oh, yeah.
fleeing. So, yeah,
The Dreamliners
to get on
are,
their
by the
game.
way, this is side note. FAA did approve all Dreamliners to be able to be flown in U.S. airspace once again. So
Okay.
you're going to see those back on the old board. Moving into the next article, this has to do with Costco's earnings. Costco's earnings came out last week. Costco's stock fell more than 2% early Friday after its fourth quarter results showed U.S. same-store sales came in slightly below forecasts. I did not see that in the numbers. Um, there was tariff-related pressure, quote unquote, competition from peers like Walmart and Sam's Club, which is the same company. Costco headline profits and revenue beat Wall Street expectations. So revenue at the wholesale giant clocking in at $86.16 billion compared to expectations of $86.03 billion. Adjusted earnings per share came in at $5.87, little, just a hair higher than $5.82. So everything seemed right in line. However, same-store sales grew at 6.4%, which was higher than the 6.2% growth that was expected. So they beat on the expectations. U.S. same-store sales were lower at 6% compared to expected 6.1%, but just a little bit lower. Here's where the major growth came. It was Canada. Canada same-store sales grew at 8.3%,
Nice.
which was higher than the 6.8% jump predicted.
Nice.
International markets were exactly in line at 7.2 actual and 7.2 estimated. The growth in market share came because Walmart Sam's Clubs posted the same store sales growth of 5.9%, so less than Costco. Costco is growing by more. Annual, I could talk maybe, revenue for Costco fiscal 2025 tallied in at $275 billion with adjusted earnings per share of $18.21 per share. Same-store sales have beats as well at 7.6% growth versus 7.5 expected. Now, of course, the CEO's got to get on and talk about his hot dogs. Quote, this is a quote from the CEO at Costco. There are no better examples of this than our hot dog combo, rotisserie chicken and Kirkland bath tissue. In
I love that hot dog
2025,
combo.
right? In 2025, Miller Chip boasted that the company sold over 245 million hot dog combos, over 157 million rotisserie chickens, and enough bath tissue to reach the moon and back over
Oh
200
wow.
times.
Wow.
Year
Wow.
to date, however, Costco's stock has been a laggard. With Friday's decline, the stock is flat for the year, and the S&P 500 is at a 13% gain. So a flat stock for Costco. How I believe Costco is fairly valued, and it just had a good run last year
Yeah.
that really pushed it up, and it's fairly
Well,
valued where it's at. I'm not expecting any more growth in the stock without some kind of catalyst to provide that growth. Brandon?
well, I think what you just said too, I mean, the stock was down 2% after the earnings beat, and that to me, again, for people who are thinking that we might be in a large stock market bubble, I mean, a lot of companies beat, and the rewards for beating this quarter didn't seem like they were very
Yeah,
big. I think the average increase was like 1 or 2% or something like that, whereas companies that missed were dropping a lot further than that. And that's not at all a symptom of a big stock market bubble, which, first of all, generally speaking, the stock market itself doesn't usually go into one big giant bubble on its own. It's usually a bunch of different bubbles, right?
yes,
Here and there. It's not a whole big everything's overvalued and overinflated. But yeah, again, I think what the stock market's reaction to Costco earnings beat is another symptom of us actually having enough cautious outlook and a cautious optimism to where it's not a stock market bubble. But I
yep.
do believe in what you're saying right now. I do think that this is fairly valued, whereas if you were to buy it right now and hold it over the course of a number of years, you're still going to have increases, but there's better opportunities out there.
Exactly. I couldn't have said it better myself.
Yeah.
My last bit of news, Brandon, is for you. This is a question, and this has to do with earnings. This week, the only major company that I saw that look at, sorry, there are major companies reporting earnings this week, but the only one worth out of noting for myself is a question for Brandon. Nike reports on Tuesday. Is
Okay.
this turnaround for real?
Yeah, I think it is. I think it's going to take longer than what was initially anticipated, unfortunately, even by me. But I do think it is for real.
So what are you expecting to hear on Tuesday?
I just want to see that price to earnings ratio come down. I don't want to see earnings go up. That's what I want to see. I want to see the price to earnings ratio go down and earnings come up. And I'm expecting to hear more about how they're handling tariffs. Hopefully they're getting that under control. Hopefully their supply chain's getting better. And I want to
You're not
see.
worried about market share? Because I believe
No,
they're
I,
still
I
losing.
mean
I believe
honestly,
they're losing market share still.
I think that peaked. I think that's already peaked. I think the loss of market share has already peaked. So I want to hear more about like, retaining market share that they already have and gaining it back, which essentially just becomes going back to the basics and store sales of Jordans and things like that.
Gotcha. Because again, I bought two more pairs of shoes since the last time, and none of them were Nike.
Really?
Yeah, I don't own a pair of Nikes right now.
You don't have any pair of Nikes?
No, no Nikes.
That's
For
interesting.
for working out, I have Hoka's, On Clouds, and Born Primitive. Those are my
Okay.
three brands that I for working out right now.
So if I'm right in the turnarounds for real, then that means that there's more opportunity,
It does
right?
mean there's more opportunity.
But
Yeah.
if I'm wrong, then that means that it's a continuously declining brand. So I'm hoping I'm not wrong.
Yeah, and for fashion sneakers, I have Adidas fashion
Okay.
sneakers because they have different colors and different styles as
That
well.
makes sense. You have
And then I'm different from everybody else who has Nike Air Force One on different colors. I got Adidas in different colors.
okay. You got your fascist sneakers from Germany. Oh, you said fashion.
Fashion.
Okay.
But,
I'm just kidding. I was messing. I don't know.
all right.
Okay, crickets
Final
on that
thoughts,
joke. Go ahead.
Brandon. We'll move to final thoughts now.
I haven't made a complete decision. I'll have a decision on Comcast by the end of the night, but I'm thinking I'm probably going to wind up buying it. We'll see.
All right. My final thought is on this. I'm going to give everybody here an update on this $20 a paycheck or $20 every 2 weeks, I guess, that I've been putting into Robinhood to mimic someone who's just starting off. I'm currently up to now $307.38 in that account.
Nice.
I am now switched to a fully dividend only investment approach on this account. We'll see how this works out. I have no idea how this is
But
going to
why
work
would
out,
you do?
Brandon.
You're doing dividend only on just starting
I'm
out?
doing dividend stocks only.
Okay.
Dividend stocks
That
only.
I mean, that's
And
interesting.
it is. And I'm using the dividends. I'm buying two different stocks, and the dividends they pay out buy two other dividend stocks.
Okay.
And eventually those two other ones will buy two other ones. And that's how I'm growing this account.
What do you have in
And
it, if you don't mind answering that question for
currently,
me?
currently I own three stocks right now. Currently,
Okay.
I own ARCC, I own Coney CONY, and I own Misty MSTY.
High dividend yields. What are the yields on those?
Coney and Misty High
I
are
know
very
Coney's monthly.
are risky. Those are risky. ARCC is a typical investment company, and they pay a high dividend percentage, and they pay every 3 months.
Okay.
Like Coney and Misty, yes, are monthly ETFs dividends.
Gotcha.
Yeah, that's where I have it looking right now. One thing I will talk about, GE Vernova has taken a dip the past couple weeks. I I look at all these data centers and they're going to need power for it. I would use this as an opportunity to buy more GE Vernova on these dips because I don't see a reason for it. I looked into some news. I tried to find out. I don't see an actual, real, fundamental reason for GE Vernova taking a dip right here. I still believe in the company. It's easy for me to say that since my cost basis is less than $200 a share.
Yeah,
Um,
it's got
but
a high price to earnings ratio, which I mean, yeah, it's going to take a dip when there's market pullbacks. That probably dip a little bit further than others, but I mean, there's no lack of catalyst here.
yeah,
I mean,
there's
the stock is dipping at the same time we're getting news reports that the U.S. grid is in danger of being overloaded
so there's
with
plenty of
artificial
opportunity.
intelligence.
Yeah.
Yeah,
Plenty of opportunity. I do want to mention one quick thing about Rig Transocean. That company took a big hit this past week because they offered shares for sale to pay off debt, and the shares they offered for sale were at a steep discount. It drove the stock price down because of that news. And the fact that you have to sell shares in order to pay off your debt is not good sign for most companies that that's the only way you can pay off debt.
right.
That's not a good sign. That means you're not in good physical financial health. This is a company on the show that I've traded before, traded, not invested with, traded as an on the show before, and that's not a good sign for them. And
No,
considering they just launched the biggest oil rig in the world recently. I'm kind of wary about their financials that they're having to do this. That tells me their leases on these oil rigs are not what they were boasting about just 6, 9 months ago. So not a good sign for Transocean. Some of these other oil companies also not doing as well. Exxon's been stagnant right where it's at for a long time, for over a year now. Been right around the 110 to 18, 120 range for over a year. It hasn't really moved. None of these have moved. So not looking too much as far as the oil stocks right now. And yeah, that's right where I'm at. There you go.
Okay.
All right, we thank you guys for listening. We hope you like what you've heard. We hope you hit the subscribe button. Tell your friends and family about us. If you're in Switzerland, I'll see you soon. Thank you all for listening. We've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.